Cheryl Stokes, Mary Bartos, where are we?
I'm lost. I have greenery. I have no idea where I'm at. We're usually online.
I know we usually are. And this is our new video studio. So
it's gorgeous.
Remember, this is Cheryl Stokes, my cohort in crime here from New American Funding, and Mary Bartos, Bartos Group at Premier Plus. And let's just jump into it because this is housing update for June.
And the month is almost gone. So
yeah, it's crazy.
We're on time this month.
And we are. We got a week or so to go. So it's all about the mortgage rates. Cheryl, it's all about you, my friend. It's about you.
It is. It is all about the mortgage rates. And yes, we all know they've risen. But that's okay. We are trending towards a more normal, stable market.
Yes. They
have risen all year. This is a little bit dated. It says June 2nd. We're at June 21st, and then we're really about 5.875.
Yeah.
But they are leveling off.
Which is awesome. But when we look back, at 5.875 as of today-ish, look how we compare in all the different decades.
Exactly. And we have talked many times about our past mortgage rates.
Yes.
I had 13%.
14%. Yes, we walked uphill in the snow both ways.
We did.
To school.
And we survived.
Yes, we did survive.
And we will all survive 5.875% as well. It's a financial tool. It's not permanent.
And it's less than inflation.
It's less than inflation. And you've heard me say this before, it's a tool.
It's a tool.
It's a financial tool to get us into where we want to be. It's not a permanent situation.
Absolutely. And adjustables. We can always get an adjustable.
You can get adjustables. You can refinance in a year if the rates go down. Yeah. You have so many options. Just utilize the tool that you qualify for now.
Love that. So are we in a housing market correction? People are asking me that every day.
No.
Talk about it.
No. And as this slide says, a correction is a decline of 10% or greater in the price of a security, asset, or financial market. I don't think we meet that criteria at all.
And as a matter of fact, if you look at all the pundits that are out there and what they're predicting, Fannie Mae, Freddie Mac, et cetera, the average that they have is like 8.9%.
That's a pretty good return on your value.
Yeah, absolutely.
I think so.
Absolutely. So are we at a turning point?
I think we're seeing some changes going on in the market, but we're not seeing drastic change. I think we're seeing a leveling off, both in housing, time on market, price, whatever, but also in the rates. And I think we're establishing a more normal market than what we saw in the last 2 years.
That's what Danielle Hale said, right? We're starting to see signs of a new direction, but the ball is still in the seller's court.
Yes.
And I find that interesting because we still do not have inventory at the end of the day.
Right. So it is still a seller's market.
Absolutely. So if you look at what's happening with showings, Showing Time records all this, which is how we electronically get our showings. And, if we look at what pre-pandemic demand was, Cheryl, it's crazy. We are so much higher. Yes, we're coming down, and this data is from April because it's the most current we have. So even if we came down 100 points, we're still above pre-pandemic stages.
Oh, for sure. The market is still tight. And when I say we're starting to normalize, we're still nowhere close to where we were 2017, 2018.
No, not at all. So if you're looking at what they've done, seasonally adjusted rate in millions, they are suggesting that, through April 2022, that we'll see 5.6 million sales this year. If it's adjusted based on what we've had, the track record. And look, we're still above it.
We're still eclipsing the best year of the prior years, which was 5.5.
Yeah, which is amazing. So we'll look at that a little bit more. But the question is what's ahead? What's the crystal ball? What's Mike Fratantoni saying?
Well, Mike says mortgage rates are likely to plateau near current levels, which is what I am seeing. The financial markets have attempted to price in the impact of Fed actions over this cycle, and they are likely also pricing in the economic slowdown that will result. Once we're past this rate spike and associated volatility, MBA expects that potential homebuyers may be more willing to re-enter the market. So a couple of things there. They are leveling off.
Yes.
We actually saw a slight decline in rate after the last action because it was what we expected.
Yeah.
And homebuyers are still willing to enter the market. We say re-enter because some people are a little bit hesitant because they're concerned about the rate. But I am seeing what would have been a completely normal market in 2019.
That's awesome.
So we're still busy.
Yes.
It's just not a manic pace.
Which quite honestly is great because buyers got fatigued during that pace. This was the difference between Fannie Mae and Freddie Mac at 6.1 and 6.9 million homes this year. You saw in the pace that we were doing is less than that. But who knows what's going to happen in the next half a year.
Right. And those are great numbers.
Phenomenal. So again, you're my reader. Realtor.com, what did they say?
So Realtor.com says experts don't believe the market is in a bubble or a crash is in the cards. Like during the Great Recession, I agree. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. That is likely to keep prices high. And you and I have talked about that before. There are 82 million millennials and 82 million following them. They totally outpace us as the end of the baby boomers.
Right.
That demand's not going away.
No, it's not. They need housing, which takes us to the next point. Everybody's asking me, are we in a recession? Or the news is meant to terrify, not clarify.
Right.
We've got, inflation, we've got recession, all these big words that scare people. But, what is the National Bureau of Economic Research defining this as?
Well, they define a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. I don't think we're seeing any of that yet. I know that there is a concern for that.
Right.
But right now, we're not in a recession. We've got good numbers. We do have inflation.
Yeah,
we have. But the rest of the numbers are very positive.
8.6 is what I saw last week on the news. And I was looking nationally to see where the inflation was based on each country. And we're kind of in the middle.
We are. It's not a U.S. problem. It's a world problem.
Right.
So I think it's going to continue. But all of our other indicators are great.
Yes, exactly. And, even if we get to that R word of recession, that really doesn't equal a housing crisis. I love this slide, and I actually used it today, Cheryl, at lunch with one of my clients. I was having lunch with her, and she said, what do you think about this? Because the news is bombarding us. And when I showed her this slide, it really clarified that even 2008 was an anomaly and craziness.
Right.
So, yes, that was overlending, using our homes as piggy banks, et cetera, et cetera. But every other year out of the 2, 3, 4, 5, only 1 out of 5, we saw a reduction in price.
Right. And remember in 2008, the equity level in homes was very low compared to now. With all our new lending practices, there's more equity held, trillions of dollars in equity in housing right now.
Yes.
We're not going to see the kind of decline that we saw then.
No, and we had a slide, I think it was last month, that showed people what they were taking out when they did all of these refinancing. And they weren't taking out, they weren't using their homes as a piggy bank.
Right. They weren't taking out to the level of the value, just enough for whatever it was they need, but retaining a good high equity in the home.
Yeah, I love that.
Which is what's keeping us in a great place that we're in.
Exactly.
Right now.
Exactly. So really now let's get down to what's happening in our area. This is, where the rubber meets the road, so to speak. I wanted to talk about median days on market because there's a lot of interest in that. Yes, they are still super low. And there are some price points that we'll talk about in a minute that are lasting longer on market just because, people are kind of been terrified by what's happening in the news. But check this out. When we go back, this slide goes all the way back to 2019, and you'll see that Marco Island had, which is in the yellowish color, had over 100 days on market.
Right.
And you look now, it's at, roughly 10 days, which is crazy.
And people are panicking because it's gone up a little bit.
Yes.
It's 10 days.
It's freaking 10 days. And even it sits on the market longer. It's 30, it's 60 in some price points. It's okay because honestly, when I started in this business, you could have a baby in the time it took you to sell a house. So 290 days on market was not uncommon.
Right.
Right. And so craziness as that happens. So if we look at pendings, I want to show this, Cheryl, too, that if you look at the spike, that goes back to January of 2021. And that high spike to the left is really what was in March. And we usually spike out in our pendings in March. And then you fast forward and we normally see it go down in pendings in the summer. That is a normal cycle for us. And then you saw the little bit of the spike in the second spike in, which was March of this year,
Right.
We didn't have any inventory.
Right. So it still went up as it always does. It just is relative to what was available.
Exactly. And people were getting outbid and they were really struggling and didn't want to pay what they had to do.
Right.
We saw April go down and May, this is through May went back up again. Well, I'll be anxious to see what June has. But it's interesting, I think, from a standpoint. And then when you look at pendings by price point, now this looks at June 1 through June 20. Cheryl, between 250 and 500, well over 50%. And then you look at 500 to roughly a little under $1 million is our next biggest point.
Right.
That's what you're seeing people buying right now.
That's what I'm seeing as the meat of the market.
Yeah.
That's where I'm seeing the most financing is in that range. We've got some financing over the 1.2, 1.3, 1.8. But really the meat of the market, I would say, is 350 to 6.
Yeah. That makes perfect sense with what we're seeing here. When you think about it, yes. So if you are looking to sell your house, is a $3 million market moving? Yes. This is 20 days into June. We had a few months quiet, just a few weeks quiet. 1, we had Memorial Day, always dead quiet.
Right.
2, we had a storm that they said was just a rain event, but they said it was going to be a huge storm. And then we had the news to terrify. So I submit that we may be a little behind in our higher end market because of the terrifying news, but we'll see it bounce here because tomorrow, I'm having 2 showings on a house that's listed at $9 million, that's been super quiet for a few weeks.
Right.
So super glad about that's coming back. Cheryl, we always end with, is it time to move?
Yes.
So says Cheryl.
Yes.
So says Cheryl.
I think it's still a great time for a seller. It's still a great time for a buyer, whether you're a first-time home buyer or a second home buyer. Again, the rates are within the realm of normalcy.
Yes.
And if it's time for you to move, if this is the time where you have the assets and you've always wanted to make a move, do it.
Yes.
I don't think you're going to have any less appreciation.
No.
So I think you should take advantage of it because we don't know what inflation is going to do. And if you want to hedge yourself against inflation, buy a house, pay down your principal, and build equity at the same time. That's the best hedge you have.
You said it here. This is our housing update for June 2022. I'm Mary Bartos, the Bartos Group, and
Cheryl Stokes, New American Funding.
And we can't wait to see you here in July.
July.
Ciao.